you doing, man?
I'm good. How are you guys doing?
I'm good. Let's just roll our intro real quick.
I feel like I'm losing my mind. Is everybody in the world blind? Please, Lord, give me a sign, a sign.
I wanna be the greatest. Everybody on the fake shit. I look around and feel like everybody is the fakest. I make this every day and I'm impatient, hoping one day I blow up from the basement.
Us to be the greatest, we need more people to come into the room. Please share this with your friends and family so people are gonna show up. What's up, Mo? How you doing, man? Did you notice I got kicked out of the room in the middle of the song?
I know. I added you back. There's no way I was going to do the intro.
Yeah, it was weird. It's like I randomly just got kicked off and said, sorry, error happened or whatever. How you doing, man?
Good, man. Tell us about your vacation.
It was amazing. Listen, everyone who's watching right now, throw one in the chat if you guys like cruises. I went on Virgin Cruise. Have you been on that before, Mo?
I've never been on a cruise.
Never? Like
No.
ever? Oh, wow.
Never.
Is there a reason why you're afraid of water?
No, I don't really. I think I'd get bored. Like, I know there's a lot to do, but like, I guess it's like Mexico all inclusive on a cruise. That's what it is, right?
Yeah, pretty much. Because I'm not really into cruises that much either. I've only been on one prior to this one with my guys. It was we went on a Carnival cruise and it was cool. I just realized I don't like to just, I don't know, what it says, haven't been since shutdown. I didn't really care for it because I felt like I was stuck on a ship and I got a little claustrophobic. But this one I went with my wife and we went on Virgin Cruise, which is, I guess, is top tier one. And I gotta say, if there's a difference, I guess Carnival is like the spirit of cruise lines, and Virgin, I guess, is like, I don't know, what's a good airline? I don't know, Emirates or something. And it definitely met my expectations, but I also realized I definitely don't like cruises. I think the idea of it sounds cool, but it's kind of stupid if you think about it. There's a bunch of people who pay thousands of dollars just to be on a ship to eat and drink and just lounge and lay around. So it's like you're stuck in a hotel for all those days because you get to, you land and then you get to go off the ship for about 8 hours or so, and then you come back on and you do the same thing over. And it has some entertainment and stuff, but Virgin was adults only. The only thing I was a little confused about is like, what's their audience? Like, who they're going after? It seemed like they're very much like all inclusive because we saw people who were like their early 20s who were single, some people in their early 20s who had girlfriends or boyfriends, and then we had a lot of people in their 30s and 40s that are married, and then a couple of old people, and then I would say probably about 20% gay community. There's a huge gay vibe there on the ship as well, but it was cool. Everyone got along. It was really awesome, and I had a great time. I just don't like cruises like that. My feet swole up and everything, I guess because of the salt water or something. Also probably from the shitty food I was eating the entire time. But overall, if you want to do cruises, everyone do Virgin. I think Virgin's probably by far the best. And when I was talking to other people who love cruises, they said Virgin by far is definitely the best. So yeah, man. What about you? What'd you do for this entire week and a half?
I was probably working. I'm learning different things. I took a couple of programs for just marketing, sales. I've done sales all my life. I like to learn more about that stuff. It's mostly psychology that I like learning. But yeah, man, I don't, if you know me, like I was gone to Palm Springs for a week and I got bored after day 3. I was like, I want to go back home. I don't know. When I worked a job, for some reason, I used to love going on vacations. I used to use all my 3 weeks and then borrow more for the next year.
Mm-hmm.
Ever since I got out of the job, I don't know. Something about owning your own business, you don't really want to go for a long period of time. It's volunteer. Like I don't really feel like I have to, but I don't want to. Like someone said I wouldn't do Mexico. I don't know if I could do Mexico now.
Why? Because of the crime?
Well, I don't. So a lot of people don't know this, but I didn't really quit alcohol, but I don't drink. Like I used to drink every weekend. Now I drink like maybe once every 4 or 5 months. And for me, Mexico was just like, you get there, you start drinking in the morning, you drink every single day for 7, 10, whatever days. So
yeah.
Like,
yeah, my wife actually didn't feel good once we got back for a couple of days. So it's part of it. Dude, you guys know I'm into movies. I love movies. I love TV shows. Have you seen the TV show? I guess as they call it, what is it? Limited series called Painkillers on Netflix or Dope Stick on Hulu?
So I had a cousin come in from Toronto, and he was like, "I have a headache." I offered him Advil, and he said, "I just watched Painkiller. I don't. I'm never gonna take a painkiller again." So
It's crazy, man. Oh, look who's there. What's up, Mark? Yeah, dude, it's insane. Like those it's about basically Oxycontin, right? And I didn't realize the effects that it's had before. Have you ever been on Oxy before? Yeah, I've never taken it either. I'm clearly you're not because you'd probably be like dead somewhere. I don't know. It's crazy watching it and how these people literally Purdue literally got away with it. To this day, like no one is serving time right now for the thousands and thousands of people that they murdered, putting people on this oxy. It's crazy, saying how safe it was, and people just got addicted and took over their entire livelihood. It was sad. But yeah, all right. So we got people coming in here now. Enough of the chit chat and the bullshit. Let's get into some talks about trading. What have you done?
So one of the things I have done is I don't go in with a macro, which is hard for me because I always like to have a thesis and then going in. Now I go in, watch pure level trading. Like you're out at the end of the day. I don't do swing trading. Mostly, if I'm doing it, it's just rolling with profits. Otherwise, just very strict guideline. Like for a lot of new traders, I'm just telling them only trade when you're like absolutely comfortable because there's something called recency bias. Imagine you just got in the market in September and that you just only know that 1 month. That's what you're going to think trading is like. So it's hard for new traders to adapt when we go from September to October. It's like, I feel like people that start with a month like September have a higher rate of being successful because they've seen like what a hard month looks like. And that's why a lot when people started 2020 was like an easy year, not a month, is an easy year.
Mm-hmm.
Coming that there and then doing 21, then 22, and now 23. It's crazy, man. Like social media is a big part for me. Like I'm a trader. I like posting like what I thought, what I think, my thought. I don't go on Twitter at all. Like if I'm going on Twitter, it's after market, like looking at what people are saying and all that stuff. It's hard, but that's just what I do now. Those are the changes I've made.
Yeah, that's kind of why I kind of got off of social media for a while. I closed on my Instagram, as you know, and yeah, I stopped talking about finances much on Twitter. I repost something, but that's pretty much about it. I don't really talk about trading as much anymore. With that being said, though, I am currently in a vertical trade. I got a vertical trade today. XOP, I've been trading that since this entire year. But once it ran above 130, I kind of stopped trading, but I see it started coming down again. So I got in a vertical spread today. For next month, I'll give you guys the play that I'm in. Not financial advice. Again, do what you want to do yourself. But I'm in 17th November, which is the monthly. I bought 150 and I sold 145. I collected a premium of, was it 132 is what I collected per contract. So that's what I got going on right now. I got a pending order sitting for Disney. I'm not sure if I'm going to do this now because I was going to do a poor man's cash secure put. I'm sorry, poor man. Jesus, what was I saying? Yeah, poor man cash secure put. Yeah, I was going to do that. I was going to buy the contract and then sell some positions against it like I did before. I talked about it several weeks ago when I did it, and I was in profit on that one, and I got out before it started tanking. But Disney finally broke $80. So it did jump up today to 81. What is it at right now? 80.81. But it did break below $80, which was a shocker. I did not think it was going to break that, but it did. It did come back today, so it held over 80. But that's a crucial point because below that, I'm looking at $76.89. That's when I would most likely potentially buy a leap option and start selling. Well, not a leap option, probably 6 months out and start selling positions against it. But I could see honestly Disney going down to potentially 66.72 between the 60s. I could possibly see it there. Do you see a future for Disney anymore? Well,
I think it'll get bailed out. I don't think it gets like I think it'll pop back. There's a lot of old investors, and I think they have a very rock solid team. Disney is a cult, in my opinion. Like, I know people have been saying that it's not that as busy as it used to be. The parks are semi full. They used to be packed before, so I get it. Like the economy is slowing down. But I also think we're in September, October, where recession news is getting rolled out. I think it's fear mongering. These stocks are a lot safer than stocks like mid or small. I don't want to throw names like Palantir, Rivian, other names, because it's like people. I get it. People get emotional. Their money, their hard-earned money, is invested in it, and they're not used to the psychology and how do I say it? They don't know neutral grounds. And I'm not even talking about stock investor. Even if you talk to real estate investors, it's the same thing. Like they'll like Mr. Pushup just said, like, I don't like arguing or debating with traders. I don't like debating or arguing with anyone. Like, there's no point. You're right. Sure. You're like, move on. Like, why would you waste so much energy correcting other person? Because at the end of the day, that's their point of view based on their experience. The truth is, most people don't fight with or argue with logic. It's emotion. Then you're not going to win, or you're not going to get the point across more than winning.
Yeah. It says Disney just went down on kids' admission. Just saying, not a fan of Disney. Yeah, I can't. I have an emotional attachment to Disney because it's Disney. We grew up with Disney, right? Growing up, Mickey Mouse was part of our livelihood. It's not the same anymore for this generation, clearly, because we have all these different streaming services and all these different cartoons, characters.
There's more choices.
There's more choices, correct.
Yeah, it was limited.
Yep. And then also these streaming services are struggling, except Netflix, clearly. But they were trying to compete with Netflix. And listen, I'll sit here and I'll say I was wrong. I really thought that these streaming services would come in strong and they were going to kick Netflix's ass. Didn't happen. It seems like they're struggling. I mean, what is a Paramount, which I do like. I have it in my dividend portfolio. It's at like $11 now. Warner Brothers, I think, shoot, $10 or something like that, I think, right now. Everyone's struggling right now. And that's the only reason why I don't want to touch Disney yet, because they have a lot of fixing to do. And even looking at is it a 10-year chart that I pulled up? Yep. Looking at a 10-year chart. The 10-year chart, yeah, going all the way back. Right now, it's the lowest it's been since 2014, with the exception of the drop that happened during the pandemic. So I try to ignore those drops because that was kind of like a fear-mongering, everything sold off during that time. But if you just ignore that drop, we're literally back to 2014 prices. We're getting close there, man. But in the 60s, I think if it gets down to the 60s, I will probably add it into my Roth. I think I will. And I don't think it's smart for them right now to think about offering dividends, because I heard the rumors that they may be offering dividends again. And I think they need to get their shit together first before they do that. Moving on, though, Target is another one. Man, do you like Target?
As a dividend stock or as a stock? Because if it's dividend stock,
companies overall, his overall company dividend, just where do you think Target is potentially done?
No. Look, we talked about this a year ago, and we said there's going to be there's middle class and upper middle class. Those are the people that get impacted most by these cut downs, right? Like inflation, we've talked about, is sort of like a tax, and these are the people that get impacted the most. And I don't know if you know this, but Target got shut down in Canada, right?
Correct. So Canada and some other spots here in the United States, they kind of shut down all the Targets in near urban areas because of the crime. That's the excuse that they use. But I mean, there are
based on my opinion, I think if I was middle class going shopping in Target, but now my salary is the same and groceries are more expensive, I could potentially start going to discounted stores like Walmart and others, which can cause issues. And I personally, I feel like Target staff, they have more staffing than Walmart. Walmart's more like grab it, find it yourself, like they'll help you and stuff. But I feel like the theft would be higher in Walmart than Target because there's more manpower in Target. I think short term, there's more pain coming to Target. I also think people look at it as a dividend stocks, and that's why they're buying it. And if they're buying it for the wrong reason, they're going to sell it fast too. I would call it a value stock. I wouldn't the stock, I think, is down like 30% or something for the year.
Oh, no, I think it's way more than that, bro. Because I have Target. It's in my dividend portfolio. I actually bought some more shares today. Target is also one of those. The reason why I was bringing it up is because I spoke about Target in the past. I started adding at the low 130s because I didn't expect it to break it. It was a strong support level there, and like around 130, 127, and it broke that. So a next level I'm honestly seeing is around $95, but it's also kind of in a demand zone right now, and that's the reason why I end up buying a couple of shares now, just in case it ends up bouncing. It's at 105 right now. It went as low as I think 104 earlier this week. But if you look at the, again, 10-year mark on the monthly chart is what I have up. It's really currently it's getting close to, damn, what year is that? We're at the 2020 again. We're at the 2020 levels. Yeah, 2020 levels. But if you look at Target just in general, until the pandemic, it's kind of a slow grower, man. It didn't do much. It kind of stayed between $40 and $60 for many, many years until the pandemic happened. Then it ran up to $268 and started selling off ever since. So it's in my dividend portfolio. Again, it's not like a heavy position that I have, but I do like Target. And if I had to choose between Disney or Target, who would you choose?
Target.
Same. And then Mark posts something here too. What do you say? Oh, he's talking about Disney with that one. That did have a small effect, but I think this Disney in general is just not the best company. Bob Iger is the one who destroyed the company. I don't care what anybody says. Bob Chapek was just the fall guy. But Bob Iger is the one who turned Disney into what it is now, which is just milking the shit out of every good content that ever existed in the past and ruined it. So that's the reason. But were you looking at Target? What were you saying?
Well, Mark is saying Target will follow cost. It's just 4-6. But so if they do like pay model where you have to pay for membership, they should make a lot of money. I feel like everyone's going through to subscription model now where you charge small and that's kind of where you maintain your revenue. But dude, like I love Costco. Lately, Costco in our area, like it's getting packed. I see a lot of TikToks around too about people like going to Costco, like you need to do a licensing program for driving that cart. People just like going insane. They're like just blocked traffic. You have to wait 30 minutes to get in. There's no parking. I stopped going.
Is that because Costco is kind of like
cheap?
Is it rare where you're at?
No, it's like it's the same thing in states. The ones that I go to, Bellingham, Seattle. I'm pretty sure Mark can like say the same thing about Seattle. That one's always packed too. Sometimes we go to the States one because there's stuff that they have that we don't have. But I don't know. Like if they do the same model as Costco, I
don't think that's what Mark was talking about. I don't think he's talking about they're going to do like a membership model. I think he was talking about how delayed it is in pricing power. I think that's what he meant.
Yeah, Mark, you want to throw your charts? They want to look at since you have Target, just throw up your chart.
Let me pull it. Let me see if I can share it here. I'm on a new computer over here, so I don't have. I don't want to give too much info. Yeah, I don't want to share my account information.
Okay, I'll share it. Okay.
Yeah, because it has my account number and everything up here. I'm on Thinkorswim. That's why. That's why I charted all my stuff. Sorry. Yeah, if you don't mind pulling it up, I don't want to share my.
That's fine. Give me 1 second. Okay, so this is Target. This is what I was looking at. I was looking at monthly because Mark was talking about monthly. 108 broke. The next level is 84.63. I don't think we break that level personally. But
84. Yeah, I think we might get to 9. Wait, let me look at Target. I'm thinking 94.85 is where I have to buy my next order. That's where I'm sitting on, and I'm on a 10-year monthly. Is what I'm on, but we have very similar. Our lines are very, very similar. So hey, man, we're thinking alike. It's yeah, man, it's crazy how bad Target has fallen, honestly. And a lot of the dividend stocks, these blue chip companies, they're massively discounted. If I look at my dividend portfolio right now, if I pull it up, let me pull it up real quick. I can tell you exactly the only stocks that I'm up on in my dividend portfolio. And again, that's my play money where I just kind of throw a couple bucks here and there when me and my wife have like spare cash. Give me a second, let me log in. But I can tell you exactly the only 2 companies that I'm up on right now in my dividend portfolio. It is Microsoft and Intel. So I guess I bought Intel at the bottom. So yeah, Microsoft and Intel. That's the only ones I'm up on. Everything else is red because they've been getting it hammered just like tech did last year. So we're in that situation. It says dividends will increase to compete against higher yields. So yeah, potentially. So all right, what else we got on the dock, Mo? Let's see. Give me 1 second. Let me pull up I Not our itinerary, our plans for today. All right. Let's talk about the payroll numbers and what to expect tomorrow. Your thoughts on that?
Um, that's like it's a very very good topic to talk about. I think it's all about the numbers, and this is why like I was talking about not swinging. Like I see there's a single-minded mentality with traders. Like you have to be either a bull or a bear, and I think as we progress and getting smarter and we all level up, if we're trading, it has to be about making money. It cannot be about being right, because you can't be both. You just need to focus on making money. So in my opinion, everything is geared towards the numbers. If you talk about the flow was highly bullish. Like I always watch the last 10 minutes going into Friday. It's always key. And last 10 minutes on Friday going into Monday, they bought $11 million in NVIDIA 2025. They bought 3 million in Meta 2020. Like they were just attacking calls nonstop. And then there was some aggressive calls coming in for short term for next week. Puts, now some people are like, well, puts are more expensive going in than calls. Obviously we've been down for a month and a half now, so the IV on these puts further out keeps going up, so calls are always going to be cheaper when that happens, right? So for that reason, I would say the numbers are going to be there beforehand. If we're down tomorrow, um there's a big resistance. There's a 4200 put wall, which is right close to the 200 moving average too. There's not much to go down. If we go up though, so what I'm saying is if we go down, I'm not shorting the whole. We're already down a lot. We're waiting for a bounce. If we do rip up, I'm looking to join in calls because a lot of people got burnt today and yesterday trying to short. That's the stuff that you watch that's logical and makes sense and practical, because they're not about to take the 200-day moving average out before. If it's taken pre-market, then most likely get a trigger alert where they might have to close the market down, because that's a pretty big drop. But during market, I don't think we break the put wall. Let me take a look at where SPX 200 is.
Okay. And put this out there too. Since Mark mentioned, I didn't want to mention it because he's the one who told me about it. The TQQQ he's saying it's a solid MVP. I'm not in it yet, so I'm waiting for it to come down just a little bit further. I have an order sitting, but it has not executed yet. I have a specific price target I'm looking for, and if I miss it, I miss it. If I don't, if it gets hit, if it picks up, cool. If not, it is what it is.
So the 200 moving average in SPX is 4206. At the moment, we're at 4258. Unless we're opening under it, I'm not going to go short because we're highly oversold, which means there is a bounce coming, and the flow suggested that way too. So that's my opinion about it.
Yeah, and they say October is historically actually a good month, but it's also the month where if anything comes up that's negative or sell-off, the sell-off is freaking harsh historically. So according to research and stuff that I was doing, which is crazy. Yeah, that's pretty much it. So thanks for that input. All right, Mo, another topic I have. What's your thoughts on this, man? I was listening to a podcast recently. It wasn't the Iced Coffee Hour, but that's a good podcast, y'all. If you want to listen to just entertaining stuff with entrepreneurs and people in space, Iced Coffee Hour. I like it. It's got Graham Steffens, and I'm not the biggest fan of Graham Steffens, but I like the Iced Coffee Hour. But his editor got interviewed recently because he let his editor go, and he got interviewed on another channel, and he was talking about how he does not invest into S&P 500. He's like, what's the purpose of investing into an ETF for that slow growth forever? He's like, what, for me to put a bunch of money in there just to have a small percentage by the time I retire? He's like, I'd rather invest into companies that have potential for me to get as much gains as possible before I retire. What's your thoughts on that, man?
Well, knowledge is power. If he's done it historically, then it makes, for me, the most money you're gonna make if you own a business is investing in your business. The second is if you don't own a business, it's in yourself, which is knowledge. If he has the knowledge, then it makes sense. But knowledge is power. Like that's what it is. Like if so, we say that only 10% people win in trading, but 90% of people win in investing long term. But that's only in good companies. You know what it is? There's a symptom called hero symptom where you want to be better than everyone else and the rest. So you try looking for stocks that no one's watching because you're smart and you're going to be the one catching this, right? And that's where most people lose their money from. And I've spoken to a lot of people, and then they'll show me how many stocks they have. It looks like a ETF, like they're managing one. It makes no sense to me. But then there's people that have made like insane amount of money on just buying Tesla or Nvidia, right?
Correct.
I'm pretty sure Mark's going to show up on one of the news one of these days too, that he made 100 million off of Tesla. But you get my point. It's confidence comes from experience. Experience is you doing repetition, studies, and all that. So maybe Graham knows like how to do it, and he's mastered the game.
Well, real quick, it wasn't Graham. It was Graham's editor that he fired. He was on another podcast, and it was ended up talking about finances. And this guy, I'm assuming he's in his late 20s, maybe early 30s, and he was just talking about his experience working with Graham because Graham is all about S&P 500. That's it.
Yeah.
Like ETFs, he's very, very Dave Ramsey-like. Just invest into the total market and just call it a day. It was his editor who was like, I don't believe in that. He's like, I think I'm just need to try to get as many gains as possible. If I just invest into good companies that have potential, I get a bigger return than just investing into S&P 500. And I have mixed feelings about it because I get what he's saying, but at the same time, that can be very dangerous because then people will follow companies like, I don't know, SoFi or Palantir. And who knows, maybe 10 years from now, it might be a $200-300 company. I don't think it will, but it's a safer bet. I think if you just, especially if a person doesn't have a lot of time to research and look into companies and take that risk, just throw it into S&P 500 and QQQ.
Yeah, I agree with you. Like if you really think about like when Jeff Bezos was talking about companies and he said the price of the stock is not the value of the stock, and we're technical traders, we talk about price all the time. Whereas if we had Q on this right now platform, he talk about the fundamentals of value. Like if you have most people pick one. And when you pick one, you either get the timing off or you don't have the financials to hold it for that long. That's what I've seen with most people. I think majority shouldn't be doing individual stocks unless they're doing with their play money. If it's like the money they're hoping to retire with, they shouldn't be. That's kind of what my opinion is. But I think we don't talk about it enough. Not talking about this podcast, but in general, we don't talk about it enough. The most money people will make and the young generation will make is investing in themselves. That's absolutely where you will make the most amount of money.
Correct. And that is actually one, because I don't want to do the guy take away what he actually said, because I want to give him the props that he deserves. He did say that. He said the first thing you should do is invest into yourself. And he actually said that. All the stuff that you and I talked about a couple of weeks ago, he actually talked about that on that podcast last week. And then he also mentioned here what Mr. Pushup said right here. He said, my thing is, what's 1 million worth by the time you're 60? And that's what was one of his arguments. He's like, $1 million now is not going to be $1 million when you turn 60. So he's like, I feel like I have a better opportunity if I just find stocks elsewhere. But that also comes into play when it comes to falling in love with stocks and following people. I saw someone here who said that he listened to one advice and only one advice only from someone on, I guess, Disney, YouTube or whatever. It was Disney at 147 or 146. 147 and 149-ish, and to prove his point, right? I watched that movie Dumb Money. Have you heard of it? Yeah, it's about the whole GameStop. And the one thing that I learned, and I really, really enjoyed the movie, but the one thing I did learn is that there's a huge infatuation and cult-like mentality with a lot of people that start following certain people, and they're just following them 100%, and GameStop was one of those. These people follow this Rory Kitty guy who went from investing $50,000, made $44 million, and the freaking guy didn't sell. I'm sure he's still a millionaire. He sold at one point. I think his last post was in 2021, and I think it was $12 million, I think he had, or $20 million, something like that. And then he just disappeared off the face of the earth. And that can be dangerous when you start following that. But I was watching it, and I was like, okay, now I understand why there's these groups that are like cult-like stocks or cult-like communities that follow a specific stock, like my buddy Amit. I don't agree with his investing style at all, but he has a cult-like channel on Palantir and SoFi and Cathie Wood stocks. That's like his thing, and people love it. And there was pour money. They were pouring money in in Palantir in the high 20s, the low 20s, the mid teens, all the way down to $5. Now it's back up and they're all celebrating. But that can be extremely dangerous, I think, if people just start going down that path. So, but that's it. That's all I got about that. All right, Mo, over to you. Let's talk about the October stock picks.
Okay.
Timing the market.
Okay, let me just add this again. All right, cool. So I believe in data. I believe in studying trends. Do you hear an echo?
No.
Okay, perfect. So we're gonna go over the seasonality chart. These are usually roughly from 1923 all the way till now, so about 90 years of data. And this, if you look at it, October is usually where we bottom. If you guys look at last year too, mid-October is usually where we bottom. So this is not 100%, but this is one of the gauges that I'm using to look at stock picks. My goal is 5 to 10 years, and based on that, I'm looking at stocks. I'm not looking to buy in October and sell in November, so I have to get this right. No, I'm not. And one thing I tell people, if you have $1 million that you've saved up, you want to invest it, I would do it in layers. You could do it 200K, 100K. If you have a 10,000, use the same formula. That's how I would do it. So this is October. We usually mid-October mark the bottom. If you look at, this is for Russell IWM, if you guys know what I mean, October, again, where it bottoms. If you look at IWM, it's actually below its 200 moving average. Not financial advice, but actually have calls on IWM. I think it's going to snap back, and it's not going to snap back very fast. Here's my daily chart for SPX. Here's what you got. You've got 4206, 4200 as a massive put wall. I don't think it breaks without news, something really bad, most likely after hours. As long as we hold it, we're likely going to move up. The top here was 4,600 in July, and we're down roughly 400 points in about 2 months. Most funds are adding. You can see dark pool, and I'm going to go over the stock that I keep seeing getting hit. I don't think anyone's talking about it. It's not NVIDIA. It's something else. I'll go over it. But this looks like there's a bounce coming. You guys can look at RSI, Bollinger Band. Everything's going to say the same thing. I'll show you IWM as well.
Oh, hold on one second, Mo. I'm sorry, because of our logo. What was the time frame on that previous one that you just had with 200-day EMA? Day?
Daily, and the moving average I used was 200.
200. Okay, thank you.
Okay, so for this one, IWM, if you look at it, the 200 here was, let me just move it so we can see it, 181. And we're sitting at, I think we closed at 171. I added calls for this today, not financial advice. I think we can snap back to 200 moving average very fast. Again, they're buying a lot of IWM right now, dark pool, Russell. So apart from this, I want to show you one more. XLU. I think in the last 25 years, this is the biggest drop we've seen. People are scared. I get it. And a lot of times when people say, I'm going to buy when this goes there, they don't. They actually start shorting it because they get scared. And that's what majority of us, what we do. Like, I think I missed Tesla by like $10. I was going to buy it, but then it just bounced off.
Yep.
And so I tend to automate the process, have alert, and then just buy. Like, you're not using your brain at that point. I'm serious, for 10 years. That's kind of how I'm doing. If I start getting into that trader mentality of what's going to happen next week, I'm never going to buy because I'm going to want to time it, and you can't really time it. But if we look at XLU, look at what happened last October. Same thing, and then it popped off. Again, I'm not stating this is exactly what's going to happen, but if you're holding for 5-10 years, that's like, you can get this wrong and still make money.
Yeah, you can. Yeah, but it sucks if you held it from all the way back then, and you just held it through it. It's funny as you brought up XLU, because I was actually eyeing that. That was on my list when I was looking at some good verticals to get into, and I was going to get into a vertical put on this one I just need to do a little bit more research because that's the health sector. And I'm not right. That's the health or the utility.
Let me show you something. I don't even care what sector.
that's-
I look at Bollinger Bands. I'm technical. I know this is utilities.
Yeah, utilities.
So look at this. This is a Bollinger Band on a daily. You don't see that often. I'm going to show you guys. Find me 2 candles outside the Bollinger Band. We'll go over the chart and tell me what happened. So we had 2 of this. This happened in March 23, and in about 1 month, it touched the top of the Bollinger Band. Same thing from bottom to top. So that's kind of how I trade. I keep things simple. So I really, really like, unless you think utilities are going to shit, then and you don't want to hold it 5-10 years, that's cool. My stock that I'm watching that I really like is Amazon. I don't know if you guys know this. Amazon has had a lot of good news, but the stock hasn't moved with that. They're actually doing the same thing that Netflix wanted us to do about charging people extra for no ad. Yeah, Mark's right. There's going to be a snapback, and it's going to be so hardcore that it's going to blow all the people that are short. I don't know if it happens tomorrow, but it's coming soon. I really love this stock. If you look at this, it's falling wedge. Like, the company is A1. Pretty much all of our shopping has now moved to Amazon. They're even doing same day. They even, like in Canada, like you don't even have to go to UPS or FedEx. They just pick it up from your house. Like, their customer service, everything is top notch, and they have deals with companies like Audible and other companies, like depending on what country you're in. But yeah, so I'm watching Amazon, and I'm adding Amazon at these levels. This is potentially my favorite stock right now. Not giving you financial advice, but it looks very good. And I know funds that are adding it. I know dark pools that's coming through every single day on this, which anyone can look at. I think we could get 145 before end of year, 150 if we're lucky on tech when the rally happens. I want to point out something. There's something called risk mitigation, right? We're adding these stocks and we're hoping for a year-end rally, which happens almost every year. If something bad happens or like government takes some actions which causes the market to drop, that's also one of the possibilities. So I don't want to come here and say like there's a guarantee it's going to go to this price. There's no guarantee. This is a 5 to 10 year investment. I think it's a very good 20-25% return within the next 3 months as well. But yeah, I genuinely, I think this is going to be one hell of a ride for it. The other one, I think Marc Monroe, just to be clear, for all that we have 2 marks here, he put this on my map. I think he brought up in 2020. Was it, I think 2022 or 2021? If I buy any ticker that's an index or ETF, it's probably this for me. It's low risk. I did some research on their management fee. It's actually very low. I think it was 0.03. It was insanely low.
Let me see. Oh, so you're talking about investing now, right?
Yeah, I'm not talking about this whole session is investing, not talking trading, which I haven't done in the last 2 years. So there should be a reason why I'm talking like that. But again, there's going to be, I don't think these are the absolute bottom low. I think there's another low coming. But from there till then, 25 to 30% on these aren't bad. If you know me, I always trim some and I always leave runners. So that's kind of my plan with this. But
yeah, Mo, the expense ratio is extremely high. It's 0.86%. Hell no.
For TQQ?
Yeah, that's
high. Are you sure?
Yeah, I'm looking. I mean, according to what I have up here, I just went on Yahoo News. I'll check another source real quick. But
let's check right now.
That's pretty high. I mean, I would definitely buy it and hold it for a while and sell it, but it wouldn't be something I would hold for 10, 15 years. It's like TSL. It's like TSLL. I have that in my Roth, and I have been adding that, but that's nothing I'm going to hold 10 to 20 or 15.
You're correct. Like You're correct. My I was looking at this and I wasn't reading properly, so my bad. Thank you for correcting me. I still like it. Let me see.
Definitely good. What I'm saying is like it's just be cognizant of the expense ratio depending on how much money you invest into. Because if you like put in $100,000 in TQQQ, the expense ratio probably matters to you. If you're just putting like 1,000, 2,000, 5,000, it may not matter to you. That's just my only point. Because there's a lot of companies that I do like, or like some of these ETFs that are delicious, but the expense ratio is a little too high. But like I said, I'm in TSLL, and I think that expense ratio is pretty high as well in my Roth. But it's just trying to take advantage of the massive swing that could occur with Tesla because I got in pretty low, and so that this TQQ could also be a good potential, like Mark said as well. But
Yeah, well, Mark pointed out it's up 110% year to date. I love Seeking Alpha, by the way. It's free. But I personally like it. Like this is usually where this is here. Let me do a better job. Hold on. Let's get rid of this for a second here.
oh yeah, TSL. So for everyone who was interested in Tesla, the only reason I got TSLL is because I missed the bottom on Tesla. We didn't buy when we were $10 off on the next hit, but it's that expense ratio is over 1%. That's crazy.
Yeah, no, I know, Mark. I know what you're saying. Like that's why I like it because it's risk reward. Yeah, you're paying more, but you're also getting.
Yeah, it has some good swings.
So here's what I see. This is usually a basing pattern. This is what I usually watch out for. I think you could potentially see 34, 33, even 30. But again, you're risking timing then. But I think we can get there about 39-ish by end of year. So about roughly from here, another 10, 15%. And the risk isn't that, like, you're not investing in a single stock. So like, yeah, I don't want to give any more financial advice than this is my personal plan. That's what I'm going to do. So in short, I'm looking at seasonality chart. Then I'm looking at what's happening with the market. It's way too oversold and everyone just goes either too bullish or too bearish. We're either looking for like a 5,000 mark on SPX or we're going to die to 2,000. I think that's not what usually happens. There's a 1% chance of that happening. We usually follow the seasonality chart. Some of really smart people I know, they don't like seasonality chart because they feel like nothing happens according to it. The last 4 years, that's all I use that as a gauge, and it's worked out perfectly. Oh yeah, how can we do this without talking about Tesla? So this is Tesla. I think Tesla can go lower personally from here. I think we could still see, EVs aren't looking good, by the way. I know Tesla's not an EV company, but the 200 moving average on this is 206-ish. I think we can see this before year end. Personally, that's what I think.
What's the bad news that came out? Did I miss it?
They had a lawsuit.
I know they said they weren't going to meet the expectations of the deliveries. I saw that.
The delivery numbers were short at the start of the month.
Yeah.
I thought they're talking about a loss. There's always a lawsuit happening for Tesla.
Yeah, he's always getting sued for something like that. That's the reason why sometimes I'm so hesitant with Tesla, man. It's too volatile, and Elon is too volatile. Like he could say something. But speaking of what we were talking about earlier about the market potentially going up, are you not concerned about the whole stuff that's happening with the government? How you were mentioning about the government, right? Because they moved the speaker, which also means that they most likely will not come to a agreement when it comes to the government shutdown next month.
I don't think there will be a government shutdown personally. I think this is all seasonality, always like it always comes together. Something bad will happen, the numbers will be bad or something, and September is always a down month. And I think September, the down started mid, usually right off the bat, September starts selling off. So I think it might leak longer in October, but we're oversold. So I think we get a bounce before we drop again. But end of the year, we should see a big rally. That's my opinion.
Big rally? Okay. When it comes to the government shutdown, I think we might actually shut down on this one. simply
You
because I
know
don't
more
see.
about this stuff, so I take your stuff seriously on
Yeah,
this.
I mean, who knows? Because I mean, a lot of times I thought they were going to shut down this one, but they an hour before midnight or a couple hours before midnight, they end up coming to a resolution. Hence the reason why they end up removing the speaker, McCarthy. My thoughts on this is just that it's going to take about 3 weeks for them to find a new speaker, if they find one. Because who the hell wants to be the speaker now after this? And then it's going to take about 3 weeks, and they have to come to the table again and try to come up with agreement by. Yeah, was it mid-October or something? I mean, mid-November. But problem is they also took a break, I think, this week. So we'll see what happens, man. I think this government shutdown may actually occur. It may not be for long, but I don't. Have you ever experienced a government? Well, you're in Canada. I've experienced a government shutdown before. Shit sucks, especially for folks who are like GS employees and stuff and having to still work but not get paid. So, and then what Mark's saying, why should banks step in, Mark? Step in for what? Is he talking about Tesla?
No, I think he's talking about the government.
For banks to step in for the government shutdown?
I think he's talking about banks buying. I'm not sure. He'll probably reply back. I'm not sure.
I say, you're crazy. I'm not going to go to court and show up. Yeah. Look at this. And then Gen Z would go home for sure. All right. So a bank. We're just talking about a bank. Okay.
So for plays, I got nothing because I'm day trading. I don't want to give a trade that I might change my mind in the morning. But I'll tell you a flow that came quickly. Someone bet close to $500,000 for IWM for 175 for October 9th. So 175 IWM October 9th, $500,000 right at open. And something came for November 19th for about $500,000 too. Very out the money. I think they're betting on the numbers being really great and the market ripping. So we'll see though.
Okay. I'll address this comment real quick. It says election year, there will be no shutdown. Election year really starts kicking in beginning of next year. But with that being said, this is actually a benefit for the liberals. If you notice, like the liberals have lost a lot of ground. Well, Biden has lost a lot of support in the way the economy is going. So this is what's happening right now actually benefits the liberals more than anything. So for the government to shut down, it will benefit the Democrats more than the Republicans. So unless the Republicans want to get their shit together and come to the table and fix this, the shutdown may happen. If the shutdown happens, it will not be good for the Republican Party, and it will benefit the Democratic Party. So I see the Democratic Party probably supporting the shutdown just to hurt them. It's all mind games. What's he saying here? A bank will be stepping in to help stabilize and government figures out the best approach to avoiding government shutdown. So we'll see. But we'll see. So next month we'll find out or not if it gets shut down, and or not. Anyways, any questions before we leave?
Well, thank you everyone for showing up. We had a good crowd today.
We did. Thank you for showing up, guys, and we will see you guys next week. Until then, be safe out there. Hug your loved ones. Tell people that are important in your life that you appreciate them. It's a lot easier to be kind than to be a dick. So until then, take care.
That's Hunter.